Hey everyone, this is Greg from Higher Low, and I wanted to go over the cup and handle as a continuation pattern and not a reversal pattern. And what I mean by that is the cup and handle is a continuation pattern, not a reversal pattern. And so, like as an example, if you look at something like a falling knife, like Restoration Hardware has been, if you're looking at, if you're looking at this as say a cup and handle, you're wrong because you don't have a higher low you don't have a left shoulder. You don't have a base being formed. Bases are formed but with ranges or with a lower low and then a lower high. And we didn't have that here. This was just people trying to catch the knife like they were doing everywhere else. If you could even see the same thing here. This is not this not a reversal pattern. It's cup and handle. It's not a reversal pattern, it's a continuation pattern, and we'll show you what that looks like here in a second. But basically, you don't want to be buying what you think is a cup and handle off of a bottom. You need to see what you wanted to see here, and when you could have been buying it is if it could actually did kind of get back up here, and then you could have been buying this pullback thinking this was an inverse head and shoulders. But it needs to show you somewhat of a little bit of strength, like it wants to get up into these levels and retake out this high. And it officially triggers when it actually does take out the prior swing high, because that gives you a lower high and a lower low, a lower high and a higher low and a higher high. Excuse me. And so what I mean by that is if we look at XLE, which is what the discussion was regarding, or sorry, not XLE, XME. Sorry for my disorganization here. XME is very clearly had an inverse head and shoulders, and I wrote about this on February 13th on my blog. Just do a search for XME. There's a search on the right-hand side towards the bottom. If you do a search for XME, you can see the article. We were basically right here. I wrote it on that weekend, and I said, this is an inverse head and shoulders, and it looks like it wants to go higher, and it did. And the way that, so this is a big difference, right? You actually have a downward trend, it gets broken, you have the left shoulder ahead and a right shoulders, and then so you have your higher low, and now your higher high, and it actually took out this swing high, and away we went. And it acquired its target at 1968. And when I trade these things, I'm pretty disciplined. I take them off at the target. So I did take them off, and if the thing goes higher without me, that's fine. And so I took my profits on this move, and it went a little higher without me. But now, this is something that I'm watching for to go even higher. This is actually the secondary pattern. Cup and handle is right here. And I didn't like this handle at first, so I didn't really trade it. But I'm gonna get another chance to still make some money here, probably, or potentially. We'll have to watch it. It hasn't proven itself completely yet, but more or less what we're saying is this was our first pattern, and this is our second pattern. So it's a continuation pattern, not a bottoming pattern. And some might even say that this is your inverse head and shoulders here, which is fine. Once you get into the secondary pattern, whether it's a cup and handle or inverse head and shoulders, it doesn't really matter. The range is the target. So the target is your low and then your lowest high. So we'll roughly say it's like 2015 and 1138, and that gives us a target of 2892. Now, along the way, we had this pullback in here, right? And so this is a retest of the neckline breakout. And that's fine, that's normal. And now we're seeing sort of a cup and handle continuation above this neckline. So particularly if this, this downward, this little flag can be broken to the upside, you might want to be a buyer with a stop down in here for a target up in the 29 area. So this chart looks pretty solid. But the point here is the continuation pattern versus the bottoming pattern. That's a big difference. If we look at SLV. Same thing. It basically formed this inverse head and shoulders. Okay, and this is our VWAP from the lows. You guys hear me talk about that a lot. It's the volume weighted moving average from a point, and I like to use a swing low. So this is the major low. It works really well. So I'm identifying the pattern, the inverse head and shoulders, and I'm finding places that offer a good risk reward to the long side. And so I was probably, I don't remember exactly when I was buying this, but I think I actually bought it in here, and it took a little pain. But that's fine. So, and it's broken out. It's now pulled back. it has not quite acquired its target of 1735 using this high and this low. That's the range, and our target's 1735. So it got almost there, and you can see the resistance here, this prior swing high, and it pulled back. It retested the neckline, and you can see the VWAP also held. So anyone that's been buying from the bottom, the average price, oh, they want more. So we go higher and off to the 1735 target. That's what it looks like at this point. And at that point, then we're looking at our secondary pattern. What is our secondary pattern? Well, it's a big cup and handle. And away, so away we go. So what we want to see this one do is regain 1735, take out this high, and then have that area become support again. I'm more than likely going to take my profits, most of them anyway, at the 1735 target, just because I've learned that a lot of times after a target acquisition, things like to consolidate or pull back. So I will basically let it do that or go a little higher without me and reevaluate. And if it can keep going, then I'm looking, I'll look to buy flags above this area with a target 13 and 17. So be like 21, 22 bucks target. So I'll look for areas of pullback that offer good risk reward on the way into 22. I mean, I have a big base to work off of, which is what I care most about, is having some pattern to trade off of. Even when I trade flags, a lot of the things that I've been sending out on the watch list have been flags. And the reason I like flags is because, they're the ones that are going to move the quickest, right? And that's what everyone likes, right? But the bottom line is with a flag is I always want a base behind it, a cup and handle, something on a way to a bigger target. I have a flag that I can pull, and I know that there's an upside target behind that range breakout. And so the reason that I talk about taking my profits. One that I really I did this and I couldn't believe that it actually happened was the rack space earlier in 2014. I remember it vividly. So it had this inverse head and shoulders here, which I've drawn out these little things on the chart, and the target was 54.82. Okay, and the high on this inverse head and shoulder move was 56.20. So it went $1.40 above my target and rolled back over. And this is what happens on target acquisition sometimes. So we want to be taking our profits on our targets and then reevaluate. If a second pattern sets up and you have to buy it a little higher, what's the big deal? The bottom line is this is what can happen to a pattern or after target acquisition. It just rolled right back over, right through the lows. I remember vividly looking at this. Oh, I'm like, this could be another inverse head and shoulders, but it just never found a spot, and it's never looked good to get long. So this is exactly, for me, the X and me, sure, that one went higher without me, but that one, if I didn't take my profits on rack space disciplinedly, this is the kind of stuff that happens. So that's why I always say trade your targets, take your profits, reevaluate. What you wanted to see in rack space is you wanted to see a second pattern set itself up. Something like that. And then you can maybe buy the breakout or buy pullbacks, because then you have a range of 26 and 54. So you have a 20-point range there, or another 15-point range there. Or actually it's like a 20-point range. So you have that to work with. Maybe your target's up in here. So you have plenty of space here to make money. You don't have to necessarily be buying the lowest price. It's just that, from a risk reward perspective. So for me, it's take your profits, reevaluate, look for the next setup, and let it go. You don't have to take stuff off your watch list if you think it's going higher, but you don't have to be in it either. So that's kind of the bottom line. So I hope that was useful. If you guys find this stuff useful, I send out a daily email regarding the markets. So just and I do a lot of analysis like this, and so follow me on Twitter at Higher Lows with a Z, and you can go to the website www.higherlow.com, and there's a mailing list that you can join, and we'll be in touch. All right, take care.